All right, what is up, traders? What's up, tycoons? Super excited for today's video. Going to give you guys an update on Kaspa, ticker symbol KAS. This has been a very good token to trade. I've been following technical analysis very well. So I'm going to give you guys a complete breakdown, really go over the key levels and where potentially we could be heading, if we get the right signal. So make sure to smash the like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. So if you take a look, we're on the daily chart for Kaspa, and it may look like there's a lot on here. I'm going to break it down for you guys simply. We're looking for a three-wave structure, okay, a large three-wave structure to take us up here to about 0.12668. Now, there is the potential that we could go higher than that, all right? We have some other bullish price targets of 0.0149 as well as 0.017878. But there's a lot of work to be done before we get there. Okay, so I'm going to take this drawing off real quick, right? Just so you guys understand, that was a large three-wave structure we were looking for. And the reason that I think we could potentially be getting that is, again, we've been following the technicals very well. So what we're doing is we're zooming in here to some of the original levels when we started making videos on Kaspa. All right. And, we originally had this wedge right here, this descending wedge, this falling wedge. It's a bullish pattern. All right. And we did end up getting a breakout, and we got a 5-wave impulsive move to the upside. Now, after a 5-wave move, all right, you typically see a correction, all right, a corrective wave. Now, a corrective wave is going to be an ABC down, which is what we most recently got. So when we zoom out, okay, we got a strong impulsive 5-wave move to the upside, and then we got an ABC down, and we've consolidated, right? Now, there's these groups of yellow lines on here. I'm going to break these down for you and explain why they're very important. Okay, what these are is these are the Fibonacci retracement levels, specifically the three most common and well-respected. Those are the 61.8, the 50%, and the 38.2. And the reason you use these is because nothing moves in a straight line up or in a straight line down. You get a move down retracement continuation lower, or a move up retracement continuation higher. That's how you spot trend continuation. So, we're going to look, all right, we've came down, we made a healthy retracement, and we could potentially be heading up towards those bullish price targets, but we have to break through our resistance levels, okay? And these are our retracement resistance levels, because obviously we've been in a downtrend, we've retraced up, okay? And if we reject these levels, then there's a possibility we could continue that trend and head lower. But we're doing what we want to do if you're trying to get a reversal, right? So we talked about continuation. You can spot a reversal when, let's say, you move up, come down, consolidate a little, right? And then you break through those retracement levels. That's how you can spot a downside reversal. And an upside reversal will be a move down, retracement, consolidation, and then ultimately a break of those retracement levels, and you could potentially get that reversal. That's what we're looking at right now, guys. So if you take a look, right, we have our swing high connected down to our swing low. We've moved down, we've come up, rejected the 50%, came down, rejected the 61.8, came down, and we're testing the 61.8% level again. So we started the consolidation. If we break through here, all right, and we're able to break and flip this resistance to support, we have the potential to come up to those levels. All right, so the 61.8% level is going to be 0.007670. That is our main level that we need to break out and flip from resistance to support for us to go higher. Otherwise, again, we have the potential of possibly coming back down and continuing this downtrend, and all of this move up was just a healthy retracement. Okay, and a good example of that is over here on your ABC correction. So whenever you're looking for these waves, you're looking for them to respect your levels to give you some confidence in the wave. So originally we had our swing high connected down to our swing low, and I mentioned we were looking for we had the 5-wave move, and we we're looking for an ABC down. Right. And what did we do? We moved down, we retraced up to our 50% retracement level, and then we continued that trend, right, where we made a low on our A wave and then a lower low here on our C wave. So that played out accordingly, right? And we're starting the phases of a potential reversal, which could give us, that larger 3-wave structure that I spoke about in the beginning that we were looking for. Right, so they work very well as resistance levels, okay, but they also work very well as support levels, right? So if we take a look here, right, and we start to zoom in and take a look at some of the breakdown of the beginning price action. We had a swing low, connected up to a swing high. We moved up, retraced, held the 50% level, continued up higher, right? And then what did we do? We moved up, pulled back down to the 61.8 area, and then continued up higher. Same thing over here. We got a large move up. We pulled back and we broke through our 61.8% level here, but this was just a wick, guys. This was not a candle closing below it. So it's not invalidating, right? All we did was we come down, and to me, this is a liquidity grab, right? Which if you're not familiar with, I do have a really good video on supply and demand zones explaining what liquidity grabs are and what liquidity hunting is. But yeah, so, the candle comes all the way down real quick, but it snaps back up and closes above, right? So ultimately it holds above the 61.8% level, and then we continue up higher, right? And we continued on doing that, We ended up breaking through our retracement levels over here, which gave me the idea that we could be setting up for an ABC correction wave. And, we did get that, right? So that's pretty much a whole summary, right? We basically went over the 5-wave structure, the ABC correction down, and we're going to look if we can get a move up, all right, past 0.00760. Now, the level we have to be cautious of that could stop us from hitting our bullish price targets is our previous high over here, all right, right around 0.00977. Okay, that's going to be a very important level. We do have the possibility of putting in a double top at this level. So even if we break out past here, this is going to be our true breakout level. These are just the 3 major retracement levels, okay, to look for a reversal. Now, for a reversal, okay, you actually need to break out above your previous high. So this is going to be a really important level. Look at what could happen if we can end up coming up to here, hitting resistance, and then coming back down. Look at what pattern that could form. That could form an M pattern, okay, aka a double top, and that could be bearish. So you definitely have to keep all possibilities open. You can't be too biased, all right? You have to let, the structures play out. And it's good to have an idea of some of the possible structures, which is why we use these major retracement levels, and which is why we're looking at, 5-wave moves with a 3-wave correction, is setting up a good structure for a potential larger move that could take us up again to our bullish price targets up here that we have that I discussed in the beginning. So hopefully you enjoyed this update. Kaspa is a really fun token to trade. Of course, none of this video was financial advice. This is just a free video on YouTube breaking down some data, as candlesticks are nothing more than data representing a live auction market, and the interpretation of buyers and sellers. So smash the like button, subscribe to the channel if you guys are new, and I'm out.